Happy weekend, everybody, and welcome back to Precise Algorithm Trading. This is our daily market review, and since we're doing it on the weekend, it's really a weekly wrap up. But it is Sunday, June 25th. I'm really reviewing what happened on Friday, the 23rd, and let's get right into it. This is the S&P 500 E-mini futures. I'm going to flip over. Uh, so well, let's start here. Friday's candle was obviously down, and I'm looking down here at the True Momo indicator on the right hand side. There's a arrow down, and that is a sell signal, at least short term, um, on the S&P 500 here. The MACD at the bottom has not crossed over to the downside, and over on the left hand side, the MACD's been going up for quite a while. So I'm doing a little bit of a deep dive into the MACD and see if I can't get better, but just better metrics altogether, possibly better candle colors too. Better trends is really what I'm looking for. So, anyways, I'll get into that and maybe give you guys some detail on that when I have some data together. So, anyways, this thing's been really bullish, and now we've had a pullback, the better part of a week. I'm going to flip over to the indexes themselves. So this is really similar. Obviously, it's the S&P 500. It's the big contract, the SPX, and a lot of people don't have big enough accounts to trade this thing. So we trade the spiders and we trade the E-mini futures, and there's even something that's a mini E-mini futures nowadays, I believe. I don't mess with it, but I believe it's out there. So this one also hasn't crossed to the downside, but we are well overbought. You can see that, I think, especially with the True Momo indicator. So really the pullback is needed for this thing to back and fill so it can catch its breath and then potentially go higher. The question is going to be, do we stop at the purple line? I'll use my highlighter tool. Do we stop here? Or do we go all the way down here or here? And these are the standard deviation lines. This is one standard deviation away from where it closed. This is 1.5, and that's 2, and then obviously this is to the downside. So, the expectation is that the price stays inside of here through next week. And sometimes it gets outside of there, and you can see it actually stops at these numbers. I mean, look at here. This is there. This is last week, and these things project a week out. So we stayed inside that range. That's the point. And sometimes, and I'd have to turn them on to go back on the chart farther, but they go outside of the range, so they go like that, and then they bounce right off of there, and then you get that's just, they typically won't go beyond the dotted lines, so not within a week. So that's just a standard thing about the way prices move. All right, let's keep moving. Something I wanted to show. So this is something to be. I don't think I've ever shown this on here before, but these are advanced decline lines, and so let's see. Let's do this again. You can see this is advancing shares versus declining shares, and we've been falling off hard for a bit now. And this is just a day's worth of action. This is just Friday. And then I got the tick indicator. This is the actual measurement of trades, and this is a 3-minute. So every 3 minutes it makes a bar, and it's the amount of ticks or the amount of trades. Ticks literally is like one transaction. So that's a buy and a sell, or a buy and somebody selling and somebody buying at the same time. And so it measures all those, adds them all up, and then it's got a level here of 1,000, and these two middle levels are 600, and you can see we got down into the 1,000 range. And what's interesting, if you track this enough, is sometimes, like even on like big sell days, with what feels like a big sell day, it only gets down into the 600 range, and that's kind of a tell. And you can kind of see that was what was going on Friday. We got down for briefly. That's why we got tails on these candles into the 1,000 range. But then you can see right at the end of the day, the advanced decline line on the Nasdaq, which is the QD here, um, rose quite a bit. So that's a measure of buying that's going on right at the end of the market. So I think this, what I'm trying to say is, I think this uh, sell-off is at least going to pause briefly. So then we're going to look at this one, which I have shown before. This is the McClellan Oscillators, and so let's turn on our tool again. So we've got this pullback, same pullback that we were just looking at, and you can see this. This is a 200 level here, and a minus 200 level here, and you can see we got volatile and back here under and over the 200 level. Well, now we have come up, went sideways, come up, pulled back a little bit, and this could end up being sideways again, just like it was through here, because this looked like a pullback there, and that was too. But you can see we got into the 200 level on both of those, and here we haven't come up to it. So 60 is really what, from what I understand about McClellan oscillators, is 60 is the typical level that it will oscillate back and forth between over 60 and under 60, and you can see we're under 60 now on both of these. And that's the other thing you look for, is when these things are together, over 60 or under 60, it's time for reversal. And that doesn't mean we can't get down. Something crazy comes into the market, but if you look at literally at like the recent past, that was a deeper pullback before we've had a chance to. All this sideways action here. So if this thing starts to come up, now we obviously can do it like that. I would expect us to possibly come down and then start to work our way back up again, and I can show you why. But if you follow this long enough, you can kind of see that I've got a bullish bias right now anyway. Not that it can't get flipped on its head. So, and then lastly here on just the S&P, we talked about this not so long ago. We got outside the third Bollinger Band, I'm sorry, Keltner channel, which is average true range. And I mean, as soon as that popped outside of it was really here, outside of the Keltner channel, we've had 1, 2, 3, 4 days where it was outside, and then it pulled back in right there. And that's a significant tell in the markets that we're going to have a pullback. Because you can see even just right here when we got outside, we had a pullback, and this one was rough. Not that we can't have that again, but I'd expect it to come into this zone here, which is where we're at really. Just like when this pulled back into that zone. So I think these two green lines are they should hold up this market generally. And this is one standard deviation to the downside. I'm sorry, one average true range to the downside. That should be really where the price should stop to the worst that it gets. And if it gets down here to 2, then we're probably in a worse situation. Maybe going into some kind of I hate to say recession, but possibly. So, this is literally coming out of the storm here on the S&P. Flip back over here. We are above our Harvard lines, which is here on a monthly basis. And that's what I've been talking about. We're above the Harvard lines here, and we need the other indexes to follow along and do the same thing. And I think they will. Maybe that's a bold statement, but anyways, whenever we get outside the Bollinger Bands or the Keltner channels to the third one, you can go back in history on the thing and you can see how the price reacts when it does that. So, and then this is different because we're coming out of what was a pretty deep pullback, and so you have to look at that in context for the last time we had deep pullbacks like that, and you can kind of draw a conclusion of, are we going higher from here, and is this, the market, a lot of the talking heads are talking about the recession and all that stuff, and a lot of times by the time it hits the news, the recession's really over and done with. It's as far as the market goes. Then the market starts to rally because a lot of people are looking for the market to be going down, and it's counterintuitive. All right, Dow Jones Industrial Average. This is worthy of talking about. This is the Harvard line, and so this is it's really the main Harvard line that everything's tracking off of, but price has to stay above the gold Harvard line for the signal to really take. So this thing's got to come up here, and we're going to be done here in a few days. Price has to close above the gold Harvard line by the end of the month, which is Friday, I believe. Yeah, it's got to be. Let's look real quick. Yeah, Friday this week. So, because the first is going to be over the weekend, and then we get into the July 4th holiday. So, we got a week here, and price can jig juggle around, and even if it just comes up here and closes, that would be a really good. I mean, that's a long-term buy indicator for what it's worth, and then after it closes up there, literally, if you bought the Dow at that point, like diamonds or any of the Dow ETFs, the stop would be underneath this blue line down here, this light blue line, which that's a big percentage, but considering that when the S&P took off like it did when it closed back here, literally right here, that's that when it actually came up above that at the end of a month, and that was the actual last day of the month, and then it pulled back down and came down, but you can see it respected that line, and it took back off from there, and we're well on our way up, and now a close below this line is even farther, obviously, but what this really, if you looked at this thing on a long-term basis, which we can do, I don't want to drag this out, but you can see way back here that thing stayed above that line for a long time, and that's really what I'm looking for. And if it doesn't, it doesn't. You just got to get out of your position. But that's a long-term buy signal. The Russell. Let's look at the Russell. Okay, this is similar and actually a little harder because, I mean, for this thing to get up and going, it's going to have to really make a move here in a week. Now, I would expect it to actually bounce here because of the other action we've seen. But, I mean, this move, we're going to need to see it get going. So we'll just watch for that. But we do have all the right indications here on the weekly chart to potentially have that happen. These are down. This thing would have to really start to come back up again. And that'll be a brutal move to try to actually work through if you wanted to trade the Russell and IWM. And if you look at IWM, that's the ETF for the Russell. So very, obviously the same looking chart. Let's go. NASDAQ. The Nasdaq's been powering higher and is doing the Harvard line already. It actually closed above the Harvard line. It's been 3 or 4 months ago. 4 months ago. So the Nasdaq was actually the one that gave us the nod and the heads up that it was going that way. And now you can see that it's well on its way. So again, I don't really expect this thing to close underneath this line anytime soon. Although it's going to mess with everybody and thrash back and forth. It's just what markets do. And USO. So oil actually bounced down and back up again, and I kind of want everybody to see this. It's an important thing to see. The true Momo indicator is green or red, and it's really these lines here. That's green, that's red, that's green, that's red, that's green. This is not rolled over to red. And that dot right there, the red dot, shows that we're actually in a Bollinger Band Keltner channel squeeze. The Bollinger Bands are inside the Keltner channels, which means that price has gone sideways, at least, mathematically speaking. This is green, so really the fact that this popped back up again, even though it's a red candlestick, is showing that we do still have the potential to come up. I'd say we're still going to go sideways for a little bit, and if this all rolls over to red, then it's really my signal to get out, because this is already red over here. So this is when I was talking the other day about I bought in this zone, and then I bought further when it got down here, and then it came up a little bit with half my position, or actually my whole position, but half my position is positive and half my position is really negative right now. So I'm obviously hoping it goes higher. Immediately would be great, but if not, I'm prepared for obviously getting out. So TLT, this is bonds, so it's just really following the strategy. We are all negative on the weekly. Trends have to develop, weekly trends have to develop from the inside out, so they have to happen in the daily. If you think about it, you can't really get a weekly trend going without the daily doing it first. And then this is all green. So really green here, the green for a while here, and green for a while there. So, and just recently the bars turned green. So, bonds, the bond market's bigger than the stock market. So it's just a matter of, obviously, just follow the rules just like we always do. If this thing rolls over, then we got to get out. Otherwise, I'm going to be just looking for targets. Here's targets, here's targets, here's some targets, and here's some targets. There's some targets back over here, so we can take partial positions off at any targets, and the whole position off when you really what I do is try to take the whole position off when I get a bigger target. And I think that does it for that, and we'll quickly go into stockcharts.com and type in bullish. The Dow went up and added an X today. Right there, the green X, up by 4.76%. The New York average down by 1.21%. The Dow Jones Industrials have 30 stocks. The New York average has about 8,000. The transports, I don't actually know how many are in it. It's unchanged. The Nasdaq down by 1.33%. The SPX down by 0.64%. The OEX unchanged, and the NDX, which is the Nasdaq 100, tacked on 2 O's. So let's go ahead and if this, it can have one more O to the downside, come down to that 58 level, but not go to even a one tick below 58, or else it'll actually put an O here and an O here, and then that would constitute a point and figure sell signal, because this column of O's exceeded the previous column of O's. Right now we are on a point and figure buy signal because that column of X's exceeded that column of X's to the upside. So this is going to be one to watch. Now, to be honest, I think we actually do need, as far as probably the point and figure charts, to do some selling off so that we can actually, because they're all kind of elevated right now, we need them to sell off quickly and then reverse quickly, and that'll be an interesting thing to look for. And then our automatic trading systems. So they've been giving me fits, but it is what it is. The math is all baked in. So again, that's the last equity peak that we had. I should have looked up what date that is. And we've had a sell-off here recently, so that is rough. But I want to show you guys something that I was noticing. This is what it looks like on a 1 year basis. So this is 622 to 623 over a year's time. I actually went and pulled this because highlight this, but this date and that line that goes up to this box shows that on 6/27/22, and realizing it's 6/25/23 right now, so that's a year ago almost, is when this rally started. Now, I don't know what this action looked like before, and going forward I will have these records to be able to keep them so we can look at all that. But if it went sideways like this, which I actually anticipate it did, then what I'm looking for is this rally to start, because of the action that happens really from July into the end of the year in the Dow. So we'll see if that mirrors what happened before. Obviously it's wishful thinking, but that is really what this whole system's based off of. Is this is old price action, and I expect to get it again. It's just a matter of when, because all this back and forth is just chop, and this all is what the system's based off of. So I'll take chop as long as eventually it gets to go. And so I wanted to show you guys that. So here's the Russell, which it had a pullback on Friday as well. And that's, like I say, it was good for a while, and now we've had a pullback for a week or so. And this is what it looks like on a longer term basis. This is a year-long basis. So that last pullback is actually, I think, just that. And then here's the NASDAQ, which is still our favorite, but as of Friday, and I spelled this out last week when it pulled back up. I mean, this pullback that we're having now, that length is probably a little longer than that one, and maybe not as long as that one yet. So what I expect is probably a pullback up and a pullback down, and then a maybe take off after that. This one was a little bit deep too, and really you just got to be able to weather through this stuff. Obviously it's hard to take sometimes. I mean, that's what sometimes when you just leave your computer alone and walk away and check it out at the end of the day, make sure it's still trading and everything and all that, but just don't dwell on it. So that's what I got for you. This is what the NASDAQ looks like over a year's time, which is fantastic. So I'll leave you guys with that. Hopefully everybody has a great rest of the weekend, and we will talk to you again Monday night. Take care, guys.